On. Yes. Greetings everyone. Sanbonani Tambama on the Thursday. It's amazing to see on the Thursday we're out here and looking at the market and we are because we're trying to make sure we're improving in our skill and our strategy, and also because we want to also grow in terms of financial wise. Okay. So basically tonight it's all about routine. So a routine basically is into oyenzayo that you do on daily basis or weekly basis. But tonight we're speaking about daily routine. So daily routine that you need to do. Obviously, if you're watching this video on YouTube, please make sure you subscribe and you like and you click the notification bell so that whenever we upload the new video, ukwazi ukuthi uyibone. So welcome. For manje, we've got Nasi Polushozi and we've got Senzo Mieni coming through. Okay. So we're not gonna wait for more people to join in. We're just gonna continue with the session because we only have I think about 30 minutes or 45 minutes. I don't want to make each session very long. I want to make it very short. Né? So the first thing I always want to talk about is a routine that you need to do as a trader. The first routine is always check the news or the economic calendar for forex. What are the upcoming news event? How is that gonna be affecting in markets as a whole? Like for instance, if you are trading the dollar, let's just go over what I use. I use this one. Okay, I use economic calendar forex factory, so you can use that website. So as you can see on the Thursday, 18, there was a release on employment change, unemployment rates. Basically, the unemployment then is from the Australia, and rate is basically unyuka kweholo percentage wise, and then you've got manufacturing index, let's say USA, as you can see, ikhulile, and then unemployment claim was about 250K, and also these are the red ones. The one under impacts, you can see as like red one when you check in the economic calendar. The other websites is having some bulls out 3. So when you see 3 bulls, you know it's gonna be very impactful in terms of movement the current. About 3:30, 3:30 a.m. AUD. This is a forecast. Yona a projection ukuthi balindele ukuthi kuphumele lama results, but aphumele was minus 40K.9. So if you are trading AUD go 3:30, 3 a.m. namhlanje baphuma indaba ze-AUD. So basically if you're trading AUD, USD, GDP, AUD, Euro, AUD, wonke lama pairs are affected by this unemployment change and also unemployment rate. So around about 3:30 a.m. And then 2:30, obviously, there was some news that I read that are affecting the dollar. So always check those things. Every day, I always check them before I go through my charts just to see. So, but it's there's not much. We've got 12:45 a.m. NZD trade balance. Now you can see there's no red news tomorrow. So basically, I expect the market to move normally tomorrow because it won't be much affected by any news. Okay, so but let's go over to our habits that we need to look at. Let's just do this. This daily routine. Okay, so first check that is done, and then another thing you should do as a day trader, daily routine, is wait for the market to come to you. The market basically transfer money from the impatient trader to the patient trader. Trading is just waiting. It's a matter of waiting and waiting for the setup or if to be formed. And then obviously while you're waiting, you can use a map pending order instead of rushing to enter early on each and every trade. Okay. Another thing that you can do, obviously, when you talk about waiting, we are talking about this. Okay. So instead of you rushing to enter into it, let's say you want to buy, okay, you can wait for the market to come to this level over here, because mangabe market seyehlile yafika on this level. Let's say today you were buying let's say you're buying CAD, okay, and let's say you're buying CAD and you just rush. This is like 50 pips. This movement from there, from that level, from that level to that level is about 50 pips, okay? So if you waited until the market touch this level, and then obviously what you do is you can see, if ukwaze ukulinda yaze yafika la on this level market, let's just say local, and you just do this, okay, yes. So did until the market touch at this level, what you have now when you're buying trade, you now have from there to there, you've got about how many? Over 80 pips done. Done. If obviously up until there, you've got about 52 pips. What am I saying? Okubalulekile ukuthi you need to wait for i-setup ukuthi ifike kuwena. Remember, you are not in control of moving the market. For example, let's say another thing, because one thing that I've also been focusing on is this, as even trading equally there. Equally, there was like, as much as the gold was moving up to that level of supply, you can see that. Okay. Yeah. Okay. So as you can see, gold, even in this one, gold was moving up until it got to that level of supply. So as someone who bought here, at this level, and that person who othengile lana, as the market was moving up and down, forming this thing going on here, as you can see, by them waiting for the market to reach a level of supply, they've made close to 5,000 pips. So 5,000 pips, obviously, that can mean is $500 or 5,000 US dollars or 50,000 US dollars, or, depending on the lot size they're using, okay? So what I'm saying so even when the market actually got to that level, you can see there was a structure over there. There was a structure. And then being patient, waiting for the market to give you that structure, it also gave you that thing of the market actually came back and you saw that drop over there, come back again. And then there was this thing formed a compression and it kept dropping because you are just patient. The key thing is be patient enough for the market to come to your level that you want to buy. And even here, right? I think this is the same thing we've mentioned, because the market over here, if we are a mover, you can see this zone was touched a couple of times, and a lot of people are doing what here? They are just selling. People are just selling. So you've got sellers, they've got their stop losses over there. So let me just change the color to red. So you've got these people that are selling over here. But now the thing is, we know this pattern. Obviously, we know it, that if the market is moving compression and it's to a supply, obviously what's going to happen, it's going to drop. And that drop happened, and you can see that there was something like an M pattern drop. But the thing is, when you look above, you can see, man, there is a couple of, that's why I was like, no, there's something fishy going on here. I was like, no. Yes, this is M pattern. But the thing is, I can see the M is formed on supply, but I was like, no, there is something going on here. Okay, I was like, there's a lot of liquidity over here. There's a lot of people that got their stop losses above here, stop losses above here, right? So there must be some money for the market maker to come and collect. I was like, no, they're gonna come and grab it and go over there. Okay. Another thing that I normally use, obviously, is this called, okay, I use what you call this Fibonacci, okay? Because I want to take hyperbolity setup. So first routine was be patient, wait for the market to come to the level where you want it to be, okay? Then you can enter trade. If obviously you're not patient enough, what you can do, look at that. You look at that, but this was a good one over here, okay? Let's just go over to another routine. That we're speaking about. Focus on what you can control. Remember, you are not in control of the outcome of the trade. You know, what do I mean? I mean, you're not in control whether you're going to make profit or you're going to make a loss. Okay. What can you control? You can control your entry. Where are you going to enter a trade? When are you going to exit the trade? And when are you going to obviously close the trade? When I say close, you can close partial profit or you can definitely close all your profits you've made. For example, someone will say, if I'm trading and I've made, if my account balance is, let's say it's 1,000 Rand, and I've already made 200 Rand per trade or 100 Rand per trade, I can close that profit. But some people, they want to close with big profits, but they don't actually check the movement in terms of the price, okay? So what I'm saying, that focus on what you can control. Don't be like, yeah, I wish I could make so much money. This trade, I'm going to make $100. No, you don't. When you make a trade, obviously you can calculate, but you don't know whether the outcome of the trade is going to be in profit or it's going to be in loss. Obviously, because you've done your analysis, that's give you higher chances of that trade becoming a profitable trade, but you are not basically in control of you making money out of that trade. Okay, so you focus on what you can control. What can you control is your entry. You can control your entry, you can control your stop loss, you can control with this thing here, your risk reward ratio. You can control that. You can control how much are you gonna, where you're gonna take your profit. You can control if the trade is already running. Obviously, you can control when are you gonna close in terms of whether it's a loss or a profit. But I'm saying that you cannot control the outcome, but you can control your entry, your management, your how when you're gonna close. Okay, let me just show you what I mean. For example, here you are trading. What are you trading? Let's just look for another pair. Okay. For example, this thing happened to me this week. I was trading this. I was trading GDP USD on Monday, right? What happened on Monday? Let me just zoom in, zoom out to say. This is Monday, right? Let me just do it. Control Y. Okay, so today it's what? Thursday. So this is Thursday. Market opened. This is the market where the market opened. This is basically the low, and this definitely the high of Thursday, and that's the high of Wednesday. Obviously, the high of Wednesday was equal the high of Tuesday, which was that high over there. Okay, and then what you need to understand is that that is Monday, right? This is basically where the market started off this week. Okay, too many lines. Hope still you can still follow what I'm saying. So right here is this is what Monday. Okay, let me just check on that so you can see. So this is Monday. Monday. Yeah, Monday. So as you can see, whole week, what has been happening to the pound? Monday dropped. Okay. And what happened is that with the pound, I was like, no, the pound, when it gets here, it's gonna be going up. You know what happened? Dropped, came back, spiked, further drop. I was like, yo, what happening? I think I entered the buy, yeah, and the pound just dropped heavy. And I noticed it was no, there is some liquidity on the left. I was like, oh, okay, that's why. So they needed to collect some money on these people that were trading this side. So they needed to collect some money. And those, they grab that money and went up and then continue making that low, and they drop even further. Oh, okay. So as you can see, that then that drop. See that drop over here. Imagine, look at that, and you can see that low was equal that low over there, and you can see these guys are still gonna drop, okay? Because they cannot just make, you know, this thing. They don't just randomly just like, no, we're gonna stop in the same level as that the other level. No, they make it for a reason. So people will do what? So people will enter buys. So as you can see, support number 2, and you're like, okay, support number 2, why are they doing that? Why are they making this level equal that level? It's because they want to do this. It's because they want to drop below that, okay? Okay, they made that drop again, okay? Because as you can see, when the market opened, okay, just do Control-1, so we can remove all those things, okay? So we can have a few things here. So that drop was like, okay, because I was like, this is a compression to our supply, and it dropped to that level because of these stop losses that are here. These stop losses, let me just write stop losses that are over there. Remember, when basically the market hits your stop loss, that's basically money transfer from your account to their account. So they basically bank your stop losses that are over there. And sometimes they activate pending orders, and then they keep dropping. So after this, I saw, okay, these guys are gonna drop. So today I was like, I am ready for them. So what did I know? I was like, no, today we're gonna be selling the pound. So I was like, yeah, let me just continue selling the pound. And I saw this pattern. I was like, no, today I'm not gonna be fooled by these guys. They dropped, and then they obviously made that. Then I was like, yeah. So today's was a good day. So what I'm saying is that when you are trading, sometimes you analyze according to your system, okay, like I did here. Analysis was like right, but then I saw this thing is continue, like for instance, like this year is proper buy zone, okay? But now in this buy zone, the market dropped and there was a lot of stop losses here, a lot of liquidity here, and the market just continued dropping. And this, when it came back, obviously it went, one of my trade that I was holding, and it went to profit because I saw that it was gonna come back. And it came back, obviously it was in profit, but now I noticed this one, so I'm like, no, it's still gonna drop and continue making that drop. Even today, it made further drop, okay? So with that in mind, I'm saying focus on what you can control. I'm not in control of the outcome, but I'm in control how much I am going to risk on this trade, okay? This trade, because coming back from here to that level over there, once it gets there, okay, it's not really a high probability trade until it made this level over here. So now by it coming back and to this zone, I was like, no, they're now basically gonna drop because they need to collect this money on S1 and S2, they're gonna drop. So it's now a high probability trade. Now I can zoom out. When I was zooming out, I was like, yo, hey, there's so much money here that I was missing out. So I was like, no, let me zoom out. Let me zoom out so I can see a clear picture of this thing. So zooming out helps me a lot when I do my analysis. I was like, let me zoom out. Let me mark this low. Let me mark this low over here. And let me mark the next low. Then I was like, okay, let me do this. Because you need to check those things, okay? So I was like, no, let me do that. The next low is that over there. Okay. Then let me take this as a high. Okay, let me take that as a high. Okay, so let me do my Fibonacci from there to that level over there. Okay, so I like, no, okay, taking my Fibonacci from there, that drop. So I basically, when I do a Fibonacci, what do I want to check? I want to check two levels. I want to check my 50 and 60 level. That is where I want to check. I also want to check which level, the 16 and 15, obviously. Okay. But when I look at that, I saw it's okay. Below this level, there is this thing over here, which is a very good demand level. Okay. I was like, no, this thing is going to come here. Okay. Yes, it can go to that level over there, which is good because you can see that there's people call that FTR. So you can see that FTR. If we knew, you learn these terms along the way, okay? So that level over there, FTR, I was like, no, I can see that. I can see it breaking the structure, going up. When I say breaking the structure, I'm saying breaking in that level. As you can see, that level was a touch. So if you don't, let me just use this to highlight that level. The touch was there. And then, as you can see, there was a break in that level over here. So now there was a touch. I was like, no, they're going to come back to this FTR. And when they come back, obviously, what I need to note, remember, focus on what you can control. Let's go over that. So now I was like, no, another thing that I need to do as my routine, I focus on easy to track and monitor pairs. So I focus on USD index, USD CHF, USD, USD gold and oil. I just focus on analyzing few pairs, and then out of those pairs, those pairs I know if I've done analysis on USD CHF, I've done analysis on USD JPY and gold. Other pairs they just follow a pattern. Obviously, I need to analyze CAD pairs if I'm trading that. But the thing is, the key thing about trading, the less you do, the more money you're more likely to make, because your whole focus is focusing on those pairs. When they give you those high probability trade, then you are able to make good money on them. Okay, high probability trade, those are the one that pays the most. Another thing that you need to know as a trader, if you've done a trade and that trade goes on the loss, it means you need to go back and revisit and check what actually went wrong, what actually made you lose that trade. Was it some news that happened? Was it the pattern that you were not clear about? Maybe your analysis was not really, you need to do a thorough analysis. And also another thing you should also note is what lot size did you use on that trade? Were you using the right lot size? All of those things, okay? Maybe sometimes you entered in the big lots and that trade was still going to move in your direction because this was a big loss. You close it very early, okay? So it's important to keep a journal of profitable setups so you can work on them, making sure you maximize on that, and also losing setups. Don't push, don't trade to forget. It's like saying, it's like someone who's like flipping a coin. If you're flipping a coin, you understand that 50% of the time is going to be head and the tail, okay? If in five in a row you're getting a head, it's like 5 times in a row, doesn't necessarily mean on number 6 flip is going to be a head again. Why? Because the last results do not determine the future results. You understand that? The last previous profits do not mean there's going to be future profits. So be diligent on every trade you take and every trade you analyze, okay? So focus on a few pairs. Okay, let me go over that so that we can just also have a look. So what I'm saying that with this, I was like, no, the pound is definitely going down. I can see the pound is dropping. And basically, I'm expecting the pound to come to that FTR over there. As you can see, if you zoom in, you can see there is a bar over there, which is very important in terms. Just make sure I'm sharing the screen. Yeah, I'm showing the charts. Okay. So that's my expectation on that. So even with the analysis, with the signal that we shared today, so let me just go over them. So I think the first one was NZD-USD. I was at NZD-USD. We take a look at it. We're like, okay, NZD, this is the start of the week. Because if you go on 1 hour, you can see the start of the week was up there. And last week, it just went up and went up because of those. And this was like Okay, let's move that over there. So it went up, and you can see as it breaking the structure. Remember, hyperbolic trade, focus on what you can control. So obviously the market dropped. So I was expecting obviously that when the market gets here, it's gonna be what? A buy again. But then what happened? Obviously, this touch gave us a buy. It went over there, and then there was this pin. So obviously this means rejection. Okay. Obviously, if you are selling from this level to that level over there, and you're aiming that the market will get to that point. Also, the reason that the market obviously dropped is the same reason that it dropped on the pound again. Same way, stop losses that are over there, and what pending orders of people that are trading breakout. And another thing that I've noticed that, there's some gaps that I saw in the market, and I think it's because now the market has shifted. People are no longer trading like before. We're using a lot of algorithms, a lot of fast-paced trading. It's no longer like humans that are trading. It's AI that is trading a lot of times. So basically, those are fast-paced trading, like systematic trading and trading bots and all those things. It's AI, basically. That's what I mean. Not a lot of people are trading. So even here, let's say you are planning on, like when I say focus on, you can control. So what you see is a setup, okay? The market broke a structure. So there was this level here, a break over here. What do I mean by break? Okay, just do that. See that level? And then you can mark that level right there. So if you take that level as your support, okay, if you take that level as your support, so we're gonna write S and support, okay, and then you take that as support over there, and we take that level, see, break on the level, and then the market coming back, so we take that as resistance. Okay, so the market is that R. So when it gets here, obviously what you do, if you are patient for the market to get there, number one, your stop loss will be here. So how much is your stop loss from there to there? It's about 20 pips. Okay, and then when you're trading, because you've seen your previous trade, you've done analysis, from there to that level over there, how much is that? Hyperbolic trade is, can you just do calculation? From there to there, how many? Like 75 pips. So if you can see that you are busy, what do you do? Obviously, you put pending orders. What you do, you go here, you select what pending order, you say sell limits. So you take the price over here for your entry. So you say parameters, you copy that, you paste a price, and then your take profits could be here. Okay, you copy your take profits, and then obviously right about here is your stop loss. Okay, so you copy that and then you paste over there, and then you place your pending orders. Okay, so you place your sell limits over there. Okay, so now when the price come back there, it's gonna activate a sell, and then look at that, the sell went over here, and you can see if it's like over 130 pips. Okay, so obviously if you're trading with 0.01, it's $13. If you're trading 0.1, it's $130. If it's one lot, it's over $1,300. So it's basically it. But how much did you risk? Your risk was $2 to make $13. Your risk was $20 to make $130. Your risk was $200 to make $1,300. So your risk reward ratio was good in this case, because why? You've done your proper analysis, and before you enter a trade, you calculated how much you are willing to lose per trade, knowing that Even if you lose 10 times based on your account size, you will still have money to trade. Key thing is make sure you don't lose a lot of your money when you're trading, when you're getting your losses, because you just have patience, wait for it. Make sure that when you do your analysis for a stop loss, you go in a smaller time frame, even scale that M15, so that you have the smallest stop losses, but make sure obviously your entry is good. When you want to take your take profits, always go to the higher time frame. Why is that? Because you can maximize your profits. Okay, you can maximize your profits. See that entry, yo, sniper. If you are trading, waits like a sniper. In the market, it's been said that the money is transferred from the impatient to the patient, because the patient one are able to wait for the market to come to the zone, and then it drops, then they make profit. Okay. So like I said, I focus on few pairs. I don't trade a lot of pairs. So for example, here, so let's say you analyze that, you take that high, and then take that low, and you take that next low again, and the next low over here is this one. Okay, I do the same thing again. Even here, I'm like, okay, Fibonacci. I take the Fibonacci because the market is moving down. I take from the low to this high, I'm taking from the high to the low. Okay, so I pull it down. Okay, when I pull it down, what it's gonna give me? What is my focus again? Like I said before, for entering more, if it obviously is moving down, this level is where I want to enter for more buying trade. And this level over here is where I'm going to enter more selling trade. Okay. Between 50 and 60, I look for more selling. Between 16 and 5, I look for more buying. Okay. We just move that. So now what happens with this one? I was like, okay, the market, when it opened when it was here, right? And then obviously what happened? The price dropped and it came back. When it came back here, what do you think I did? Because the thing is, when you're trading, always have a system, have a plan in mind. That plan is gonna help you big time. Okay. I think also this was a bit of a good profit, even this level over here. But the thing is, now this level has been touched so many times, so it's gonna break outside. When it break outside, what do? The next level is that level over there. My expectation on USD JPY, it's gonna go there. Okay, what did I say? Focus, have a trading plan, have a trading system, have a trading strategy. Okay, so I know from that high to this low. Let me just mark that. Let me just say that is a high. Okay, that is a high. High is that high, and this is low. Okay, so I always do this with the Fibonacci before I do anything else. I mark the low and the high, so this is the low and the high. Okay, so now that is done. My Fibonacci is in place. I've marked my 50 and my 61. I've marked my 16 and the 5. And now I know, okay, if the market drop, okay, for example, you can see even within that 60, there's that candle over there, which I always say whenever I do a video, I always say this candle is very important when the market is dropping. You can see when the market was dropping, it left a footprint, which is that. And then when it came back to that level, it made that huge drop. And what happened after that drop? It came back exactly to the 16.8, of which I do what? I buy. Then I buy from there, you hold it. Remember, let's take a look at this. Let's say you bought from here. Just calculate from there to there is how many? 100 pips. Okay, remember, this is H4. That's why it's 100 pips a stop loss. But if you take from there to there, it's over close to 400 pips. Okay, so your risk reward ratio is 1:4. Okay, what is your risk reward ratio? It's 1:4. Because what are you risking? You're risking 100 to gain what? 400 pips. Okay, so you basically is what we call RR. So your risk is your stop loss, and your reward is what is your take profits. For your stop loss, in this case, obviously is going to be what? Remember, you are in control of your stop loss. You are in control of your take profit, but you are not in control of the outcome of the trade. Remember that, it's very important. So my expectation obviously on this is that the market is going to come back to that level over there. And from there, this is what I drew. It's going to go there and it's going to go there. And from there, it's going to be dropping. Those are my expectation based on the analysis, based on the strategy that I use. But the most important thing, like I keep saying it, as a habit, as a trader, these are some of the routine you should focus on, okay? Number one, that's what I do. I'm going to share what I do. Firstly, I check the economic calendar, what's going to be happening tomorrow. And then what I do, obviously, I always, first of all, I always focus on trading few pairs. I focus on trading few pairs. I don't trade a lot of things. I trade few. I focus on analyzing few pairs. I analyze USD, CHF, dollar. Focus on trading few pairs, not everything. Number two, okay. Number three, keep a journal of all your profitable setups and all your losing setups. So you know when you lost, why did that trade went on the loss? If you make a profits, why did I make a profits on that trade? Okay. And then back test everything you are trading so that you can have a trading system that you trust, that you believe, so that you won't be hyped up by emotions, but you've got a plan in place. Okay. Another thing, obviously, that I'm mainly focused on as a routine or as a habit as a trader, calculate your risk reward ratio so that you will not blow your account. You need money to trade the next day. So make sure you've got an account. Another thing, last thing is continuous learning, read books on management, read books on mindsets, and read books. Keep watching videos and learning from other traders. Okay. That is all for tonight. Stay blessed, and I'll definitely upload the video on YouTube. And make sure you subscribe and you like and you click that notification bell. And yeah, that's it. Good night. Thank you. All right. Okay, if you've got question about tonight, obviously make sure you can ask them on WhatsApp. And yeah, after you've watched the video, then you can obviously just have questions.